Let's take, for example, a market like the UK market, which because of Brexit for a long time has been set back, has been lagging behind other regions, but it also includes sectors. For example, anything that is related to industrial sectors last year had really a tough 2020 and is now coming back because of the manufacturing sector being more resilient and benefiting directly from China's business cycle and moving ahead. So in other words, value stocks, but with clear catalysts associated and hence a selective approach to equities at this point.
Nannette, I want to better understand the UK call that you just outlined, the fact that UK equities, in your view, could be a good place to put your money relative to US equities. The UK narrative appears to be changing when it comes to the easing of restrictions. The government sounding a pretty cautious tone when it comes to when we could see lockdowns lifted and potentially looking to impose a mandatory hotel quarantine for travelers, even as vaccinations get rolled out. To what extent is that scenario priced into UK equities, and could that pose a downside risk moving forward?
I mean, generally speaking, we know that the services sector, this includes travel and hospitality and hence anything that is associated to mobility, whether it's internal or from the outside, that services, in other words, are going to be held back. But the interest in the UK equity market, and by the way, it's also the case, for example, for the German equity market, is the predominance of sectors that are more related to manufacturing than what they are to services. And so this large exposure to sectors that are likely to do well, especially now in the first quarter, which is still going to be a rocky one for several regions of the world that are battling against the COVID infection and have to progress with vaccination very quickly. These are the possibilities for the equity market to actually decouple from some of these situations in services. So the answer to your question is the valuations in the UK have taken a lot of negative news, and it's in some sense the reflection of the past. There is a lot of upside. There is also dividend yields. When we are talking about an environment where there are very unattractive yields still, it makes a difference if you are able to get dividend payouts. And so this is one of the reasons why we think the UK will be appealing to a number of investors that are looking for value and for catalysts that can give some tailwind to earnings in the months and quarters to come.